You're listening to The Money Hour with your host, Tina Mitchell, on Alternative Talk, AM 1150. Now, back to the show with local mortgage and finance expert, Tina Mitchell.
Well, welcome back to The Money Hour with your host and mortgage expert, Tina Mitchell, right here on 1150 AM KKNW, the Saturday, June 24th show. I've built a network of elite industry professionals each week sharing their knowledge and expertise with my listeners. If you're hearing my show at a different time or day, you are listening to a rebroadcast. You can call the show at 1-855-400-1150 or go online at moneyhour.com to discuss anything regarding money or chat with the guests that I have in studio today. And in studio right now, Scott Schaaf with SW Group and talking on understanding credit and credit repair. Scott, thank you so much for joining me again.
Always great to be back, Tina.
So let's go ahead and start out the show with Enhancement Standards. I know that there's some Enhancement Standards going on with implemented in July 1st regarding judgments. Can you talk a little bit about that, Scott?
Yes, absolutely. And this is something that's brand new to the credit industry that a lot of people are not aware of. It's effective July 1st, and they're going to start implementing it July 10th. And what it is it's the standardization of public records. So they're basically enhancing their standards on what public records can be provided on the credit report. So we're going to see a lot of people have a lot of judgments, and about half the tax liens fall off their credit reports because they don't meet the enhanced standards. There's been so many errors. What the CRAs, credit repair agencies, are trying to do is they're trying to step up their game and provide more accurate data. But it's going to be a great overhaul. The bankruptcies are going to pretty much meet the standard, but we're going to see a lot of judgments fall off, and about 50% of tax liens that are out there are going to come off people's credit reports as well.
So how are they coming off? What areas are going to see that things are missing where those judgments and tax liens are not going to be on the credit report anymore?
Well, it's going to happen during the week of July 10th.
Mm-hmm.
They're going to remove what's going to happen is the CRAs, and when I say CRAs, I mean Equifax, Experian, and TransUnion, credit reporting agencies. What they're going to do is they're going to remove from their databases previously collected public record data that do not meet the enhanced standards. So there's going to be a lot of this data that's going to be removed. However, we're going to have to see how it goes, but when I'm on the phone with our attorneys have been dealing with this all day. The information may perhaps come back on later on if they can meet the enhanced standards with that data. So we're going to have to wait, like anything, we're going to have to wait and
see how it plays out.
Right, exactly.
Yeah.
I took the words right out of my mouth. So,
yeah.
We're definitely going to have to see how it goes. But
well, that's why, of course, and that's why credit, having a credit expert, if you have any challenges going on in your credit, or maybe not even, challenges, but just you don't have the credit score that you need for a particular loan that you're trying to get, really having an expert look at that, because there's so many areas that, because of the rights for the consumer, if they're not getting reported the way they're supposed to, then there's ways to get those eliminated and deleted off your credit report. So going into that, let's talk about, what percentage of consumers do you see that actually have errors on their credit report, Scott?
Wow, there's been, if you actually go to YouTube and you Google congressional hearings, they've done in Congress, there's so many that are out there. It's hard to put an exact number on it, but there's so many inaccuracies that are out there, and when you're dealing with so much data, it's kind of hard to not have any errors. I mean, I've seen everything under the sun when it comes to the credit bureaus. Especially with our attorneys. I was just on the phone with one of our attorneys, and he was on the phone with experienced attorneys. Believe it or not, Experian is not even a U.S. company. Their headquarters are based out of Dublin, Ireland. They service 65 million people, or actually 65 different countries, and they're not even a U.S. company. So there's so many things that go into it, and they got built up by buying data companies and all sorts and it really what it comes down to is just being aware of your credit report and knowing what's on it. A lot of people don't pull their credit report. They don't know what's on it.
Sure.
And it's very important to do that because it's going to affect you. It's going to basically decide your entire financial future. So you want to make sure that you're aware of what's on it.
Makes sense. So can consumers dispute items that are on their credit report on their own, or what's the best?
Absolutely. It's 100% a consumer's right to dispute items on their own. Unfortunately, it's not as easy as just going and just speaking very plainly and just saying, hi, this is not accurate. Can you please fix it?
Sure.
It's a cat and mouse game with the credit bureaus. They outsource overseas. You're lucky if you can get someone on the phone that speaks English half the time. And they purposely try to not do their job because to them, the dispute, well, actually, they've monetized the dispute process to where they can actually make money off of it now. But to them, it's a nuisance. They don't want to do they just want to sell everything, make a ton of money. And if there's errors here and there, they don't care. So we hold them accountable.
Knowing and understanding what the rights are for the consumer. I always say the credit consumer or the credit agencies are not in the business for customer service. They don't have to be. So that adds a whole layer of inconvenience if you really don't know how to set a
It can be very frustrating. I've had people that have sued and made millions off the bureaus. We actually sue all the time and get damages for our clients. I mean, we don't want it to come to that, but we're not just going to allow them to blatantly break the law and not be held accountable. I mean, that's just not acceptable.
So, Scott, what about proactive steps that consumers can take to improve their existing credit?
Great question. Number one thing you can do, the most actionable method, is pay down your balances. That's something you can do right away, and you have complete control of. There's a magic number. It's 30%. Anytime, there's what's called a utilization ratio, which obviously you're aware of. Anytime your balances on your credit cards overall, with all of them combined, goes above 30%, that's going to harm your credit score. If it's below 30%, that's going to help you. So that's that number, 30%. If you have high balances on your credit cards, it's going to harm you. You want to keep your balances low. So that's the first thing you can do. And it depends if you're in a position where you'll get approved for unsecured cards or if you have to go the route of getting secured credit cards or other options to put positive items in your report. But the most actionable method by far, pay down your balances. And always pay on time.
Of course.
Those two make up 65% of the pie chart.
So you hear a difference between, a lot of times people think that it's, they don't know if it's all together, the revolving credit cards all added up together, 30% of that or 30% of the individual cards on their own?
It's overall, yes. If it's on one card above 30%, but on another you have zero balances on a bunch. Like, for example, let's say that...
So switching from one card to another is not going to help because they're totaling all the revolving debt. And
exactly. So if you have 5 credit cards at $2,000 limits each, your total is $10,000 limits.
Yes.
And if your total combined balances is $5,000, your utilization ratio is 50% because that's half. So it's all of them combined.
Yep. So if you don't have the resources to pay them down, seeing if you can increase those limits to where you can get over that threshold makes total sense.
Because the opposite is true. If you pay down the balances, that's one way. But if you increase your credit limits, then the opposite is true. So your utilization percentage drops down. So if you had that $10,000, just the example that I gave, if you add another $5,000, you have $15,000 limits and $5,000 balances. Now you're down to 33%.
Yes. Yep.
So you can it's the opposite is true. So it's a percentage.
Yep. Okay. So let's talk about Fair Debt Collection Practice Act. What is it and how does it protect the consumer?
Back in 2010, the FACTA Act was amended via Section 623, which allows the consumer to dispute directly with the collection company. So what that means is, in layman's terms, is we can go and we can demand the original accounts. The federal law you just stated, the Fair Debt Collection Practice Act, it mandates collection companies and how they have to conduct themselves. And we can go after them and demand the original account signature, payment history, and a plethora of other items. And unfortunately, Tina, what happens a lot of times, as we all know, the collection companies, I mean, I've seen them abuse federal law left and right every day on their practices, but they just buy the debt in bulk, and they don't care if they have the right paperwork or not. They don't even have the paperwork. They just take the word of whoever they buy it from and throw it on your credit report. But they don't have anything to even know if that is even a valid amount, the account history. They don't care. They just buy it in bulk and just throw it in your report and just go from there and say, hey, anybody that challenges on it, maybe we'll delete it, maybe we won't, but it depends on the collection company. But that's what they do, and it's against federal law, and they get away with it every day, and we hold them accountable. Yep,
and that's how you get those items deleted. I've got just less than a minute here, but I want to ask you, inquiries, are there, because they have to provide documentation on inquiries as well, otherwise those inquiries can come off your credit, which can affect your credit score with too many of those. Is that correct?
Oh, absolutely, and the worst thing is, and this is a good tip to everyone listening, when you go to a car dealership, do not allow them to go in the back and run your credit with 50 different banks and just run rampant with your credit, because I see that all the time. Make sure that you explain to them that you want to know exactly who they are running your credit through and exactly what bank they're running your credit through, and say, do not go back behind the curtain and run my credit all over the place. I want you to put exactly who you're running it through, which bank, because otherwise it can harm your credit, and I'll have to go and fix the disastrous situation of all those inquiries on them. So that's a good tip for everyone as well.
Well, perfect. Thank you. Well, thanks for keeping my listeners updated on the new changes that are coming up here, and hopefully that'll help a lot of people with those judgments and tax liens, and maybe they can get those removed. And, thanks for the assistance that you are for my clients that are in need of credit repair.
Yes, and if they need anything, give this show a call, and we'll be more than happy to provide them assistance with anything.
Wonderful, Scott. Thank you so much.
Thank you, Tina.
You're welcome. And that is the show. This is your host and mortgage expert, Tina Mitchell, signing off for the day. Enjoy the rest of your weekend, and enjoy the beautiful weather here in the Northwest. And I look forward to talking with you money next Saturday, same time, same place, right here on 1150 AM at KKNW.